These are the IRA and Roth amounts this year. Unfortunately, these go up like so piddly every year. I feel bad for people who don't have access to putting money in a 401k or a simple or a SEP, because all people who don't have access to that can put in a 7,000, or if they're over 50, 8,000, and now it's gone up to 7,500 and 8,600. If you have a traditional IRA, which you get a break on your taxes, it's a deduction on your taxes. A Roth is not, but it grows tax-free. That's the difference between a traditional and a Roth. The traditional, there is no income limit necessarily, but at some point it becomes non-taxable. So now you have basis in a traditional IRA. And it depends greatly on your income on your tax return. Roth, however, does have income limits, and that's what those are up here. So if you're single, it phases out between 150 and 165, and married's 236 to 246. So if you are a higher income earner, what I have a lot of people do is they do what they call a backdoor Roth. You do have to have income, earned income, to do an IRA. You can't do an IRA if you don't have earned income. RMDs and qualified charitable distributions. So the RMD age is still 73. It's been 73 for a few years. In 2033, it's going to go up to 75. So apparently they think that everybody's very healthy and going to be living to longer and longer ages. If you turn 73, you are required to take RMDs out of all IRAs, SEP, Simple, 401k, 403b. The only exception for that is a 401k if you are still working at 73. Then you can forego RMDs on a 401k. But that is not the case in an IRA. If you're still working, you still have to take RMDs out of an IRA. If you miss your RMD, the penalty is 25%. It used to be 50%. Right after COVID, they lowered that down to 25%. 25% of the amount you should have taken is the penalty. If you have a Roth IRA, you are not required to take RMDs. But if you leave a Roth to your children, grandchildren, they are required to take an RMD. Doesn't make sense because it's not really taxable, but I guess they don't want that money sitting there forever. So the most misunderstood rule I see is that if you inherit a traditional IRA, they changed these rules in 2020 and it was very confusing. So somebody passes away, they leave you an IRA. If it's a spouse, you may make that your own IRA. You can take ownership of it, make it your own IRA. If it's a non-spouse IRA, you have 10 years to clear that money out. However, you still, if the deceased was taking RMDs, you still have to take RMDs. I see this all the time where people do not take RMDs or think they don't have to take RMDs, they just have to clear it out in 10 years. They do have to take, you do. If the deceased was taking RMDs, you have to take RMDs. You have to clear it out in 10 years still, but you still have to take RMDs if they were taking RMDs, unless you're under 18. If you're under 18, you can wait till you're an adult. Qualified charitable distributions, it's a great option to use if you are making charitable distributions anyway. It's a great thing. Do it directly from your IRAs. It comes off your adjusted gross income for everything. So just make them directly through your IRAs. The amount has went up. It was $108,000 in 2025 and it's $115,000 in 2026. So you can have money go directly to your church or to any 501c3 that you want it to.